this video is on a trade that I took that was actually a break-even trade, and I just want to go over why it was break-even, what I should have done better, what was my kind of opportunities of the trade, what was the threats of the trade. That's how I kind of look at things in terms of, right, okay, well, what is in my favour for this trade, what could go against me, what should I be aware of. And to be honest, there was re-entry that I should have taken, and this was kind of my main target overall, because this was an area that had caused a push down. Buyers that came in, sellers that stepped in again. So I thought that this could be an area that price reacted from, which it did kind of, but not really to the same extent that I thought it would. It just took a bit of time to get going. I'm going to go over why it took a bit of time to get going, due to where price was, due to the last 4-hour candle close. In all honesty, I probably should have waited for another 4-hour candle close before getting into the trade, but I felt that, again, it could have been a continuation trade that could have continued. It was a move that was with the higher time frame trend, so I felt that if it got beyond this 4-hour break and retest area, which the area that price was in at the time, then it could obviously get up to this area which it's hit right now and gone beyond, which is also a whole number. So there was the opportunity to have I've not even looked beyond a 1 to 8 risk to reward. That obviously is that, combined with dollar CAD, is two trades in a week that are the main moves of those pairs in the week, and you take profits whilst you go. And that's my kind of trading, on top of the continuations that are shorter. But I do enjoy these trades because it can suit people that are also working. It can suit people that want to take a more relaxed view. If you've got funding or if you've got a larger account, then there's no need to be involved in the market all the time. Just wait for those ones that are more likely to be a better risk reward, and just understand why that's more likely to happen. So if I break it down into what I was seeing from the daily below, so the daily, obviously, we have this breakout break back in area that was closed beyond on the 11th of January. We had a push back up into the highs. Then we had a push down. We created a potential break and retest area as well, which was basically my 4-hour break and retest area. But the overall trend is bullish on the daily, and the dollar is very weak overall. Now, the previous day was a somewhat bearish candle. It had a bearish candle close, but it was close to support, so it wasn't really something that I was put off by, especially if we were within the range of that day. Obviously, if you're above the highs of it, then it then becomes a bit different in that sense, because you're getting in at a buy high area in comparison to the previous day's range. The 4 hours where it starts to get into more detail, though, because this was the last 4-hour candle close at the time of my trade. I did the video on it that is also on the channel, that I was just looking mainly for longs, but I was also aware that this was a break and retest area that could be respected. It's a clear support. It could turn resistance, but I said that this could just be the reaction, and if the sellers don't really come in strong, then it should continue on, which is what it essentially did. Now, a 4-hour break and retest area of this size is something that you don't want to avoid. You have to be aware of it. So coming into it, obviously 6 to 10. Bearish, but essentially just what looked like a deep pullback into an area that was the kind of closing price of last week, the purple zone that was also the last low. So I look at that, and at the time, now it's why it took so long to get up and running, because obviously we had an impulse in the Asia session that went over how a lot of the yen and dollar pairs had impulsed. Then we had obviously this kind of London open push down into this break and retest area on the 1 hour. But because we were in this 4 hour area, which is also another kind of 1 hour area that hadn't been like a big break and retest area that price hadn't been in since it created it, that it's clearly shown on the 4 hour, we just had this kind of tug of war. We had this kind of area in the market that prices got reasons to go short and long. So obviously we get this is the 10 o'clock candle close, the start of the new 4 hour, which then creates this break and retest area. So I'm interested. I see that price has made a new high of the day. It's closed beyond on the 1 hour, beyond this wick. So to me, it's a broken structure area. But I'm also aware that it could be a breakout, break back in. Now, obviously, the last 4 hour, the 6 till 10, wasn't really the most convincing in terms of saying, no, it's not going to be a breakout, break back in. It could still be, because obviously it was a bearish candle. We're above the highs of the previous day. We just made a new high, etc. So I was aware of that. Now, if we go into the 15-minute, we have the push. We have the push above. Then I don't usually trade between 11:30 and 1:30. Now, my entry was like just towards the end of my period of kind of a break that I do, that I'm testing essentially in January, but I think I'm going to continue. But I was aware that this could be a longer term trade, so I'm happier to look at longer term trades somewhere in the right areas during my break. So if we break it down on the 15-minute, we have this push up, then the 11 o'clock starts. Obviously, I'm not going to be entering above here. I'm not going to be entering at a new high of the day. So what I'm looking for is a pullback. Now, the pullback areas, obviously we have this break and retest area. That makes sense. Then we've also got this support area here. That makes sense. It's an area that price is pushed. Like sellers have tried to come in, and then that's where the pop to make the new highs essentially came from. So it's an area that is definitely buying low. So we have the 11 till 12. That was a bearish candle. If I just go to the 1 hour, you can see that it was a bearish candle, not really the strongest bearish candle, but it closed back within this wick. So that could be a sign that we're at least having a deeper pullback rather than a just very strong push, which due to the wick on this candle as well, that is something that I would expect. So then you've got obviously the range of the last 1 hour. So it's closed bearish at the high of the day. So it's in an area that could be sell high for short-term traders. So then it's like, well, where can price go? Well, if it takes out the lows of this bearish candle, then obviously within that 1 hour range, you are at a buy low, like in a buy low scenario, because it could be the case that the bearish candle comes in on the 1 hour, price takes out the lows, and then it reverses because it's got the liquidity, it's got the best price that it wants. That's what you find quite often is price, whenever it does a deep pullback, comes close to or beyond the lower high of the previous 1 hour. That then looks like a deep pullback on the lower time frames. But if you actually just look at the 1 hour as a range, just like how I say about the 4 hour and the daily, it is a range. Even though it's just one candle, it's a range on the lower time frames. It's just the same as how the range of a day is between the high and the low of the daily candle. That's the range of the day, which is just one candle in the daily, but a range on the lower time frames. It's the same for the 1 hour. in comparison to the lower time frames again. So my kind of thoughts were, right, okay, well, we have the 12 to 1 then came in, that was bearish. I was looking to see, right, okay, well, could we take out the lows of this candle? Because again, it's bearish, but there's a wick to the downside that's showing to me that the strength isn't really that strong, because it's not been closing close to the lows of that candle. Now, the sensible option would be to wait for that 1 till 2 candle to come in, bullish candle, deep pullback, and then enter. That's essentially the way that I would say is the textbook way of the way that I trade, that I should have re-entered essentially. So what happened was we got this solid bullish candle on the 15-minute. That's 1:15. I was like, well, we're coming into the start of the US session. We're in an area that is a low, so let's see if we can get to an area, like get in an area that is buying low on the lower time frame. So what I then did was I saw that price essentially on that 15-minute had broken and closed beyond this area here. So you have this area on the 5-minute that is resistance that could turn support. So this is essentially my entry here. I've entered at price, and my original stop loss was below this wick. That was essentially the trade, and then this was what I was looking for. It was a strong impulsive move. I was looking for a pullback into this area, break and retest, and then new high, which happened, took a bit of profit, but then moved my stop loss to break even, and then that's whenever prices came back below my entry and taking me out for the rest at basically break even. But that's essentially what I was looking for, was this break and retest, well protected stop loss. I was quite happy if it just ranged around here and then popped again or made a new high. And then if you can see these wicks here, I was quite happy to leave my stop loss a bit open to then allow this area to become the next support to then push higher, and then look for these highs essentially as the next target, before then going on to the higher target that I mentioned on the higher videos and on the higher time frame. Sorry. So that's essentially what I was looking for and what I traded. But what I want to go over is another entry would have set, like, the thing is, a lot of people look at below the 1 hour in very great detail. Now, that's okay to do, but the thing is, if you just look at the 1 hour and you're like, right, okay, well, this bullish candle 1 till 2 is a strong bullish candle. Okay, it's not closed beyond resistance or anything, but a deep pullback of that strong bullish candle with price in an uptrend at a break and retest area. Then the 4 hour at that point had also closed a bullish candle as well beyond the high, so it's created a 4 hour break and retest area as well. You can look for entries close to the lows of this 1 hour candle. That then makes sense to you, right? Okay, if we get a close beyond this low, then I'm wrong. But essentially, as long as we don't close beyond it, then the likelihood is that we're going to go back to the upside. Now, the main move did happen later in the day, which I don't enter trades after 4 o'clock, because I feel that the momentum dries up more often than not. Obviously, after the spread hours pullback to finish the day, we just then had another break and retest, and we started really kind of showing the power of break and retest. Once the volume and the trend is obvious, then break and retest happen very cleanly. It's just unfortunate that it happened in Asia session. So yeah, that's that's basically the breakdown of pound dollar. I just want to show you the 4-hour break and retest. As you can see, this candle here, 10 to 2, yes, it's got a bullish, a wick to the upside and a 4-hour potential break and retest area. But to me, the key is the price is closed beyond the wick. After creating resistance, it's closed beyond the wicks of this resistance to then create a 4-hour break and retest bullish area within the overall potential bearish break and retest area. So as long as this holds, which it did, it went down into the lows of this 4-hour candle, great buy low area to then get that push, which has then essentially gone for a good 12 to 16 hours. Now, obviously, I'm not interested in selling right now, even though it is an area that can make sense for sales because of this impulse. I would at least wait for a 4-hour bearish candle because it is a strong 4-hour area that causes a multi-day reversal. So there's no need to be first in the market. You can wait your time, wait your patience, and wait for things to line up better and then take the trade. Essentially, if I'd got this trade, I probably wouldn't be trading for the rest of the week anyway because it was such a clean trade. But you can't always get the trades that play out almost perfectly. It just so happened to be that those kind of 4, 5, 6 hours of sideways movement just was enough to get me out of the trade before the main push occurred, which I was looking for as long as the buyers stayed in charge within the 4-hour break and retest area. It would make sense that it was going to continue because the overall trend, the momentum is still bullish, especially with the US dollar being so weak. So I hope this has been of use for you, and yeah, I'm going to be creating another one on dollar CAD and just going over general analysis as well throughout the week.